Hey, what's up, guys? So, yesterday, Alibaba stock rallied 36% in a single day, gaining $80 billion worth of market cap just that day alone. This came after a huge decline in the stock price, of course, that took it all the way down to $72. So, the 36% rally was really just taking it back to a previous, what many people thought to be a low. But it was nonetheless a huge rally, particularly for those who were just buying afresh at the mid 70s range. And I actually got a buy in kind of early in the day on Wednesday when the rally took place, and that portion of my position went up dramatically over the course of the day, and it opened even up, I think it was 15%. So it was a pretty significant rally. A lot of money was made by people who got in low. So in this video, I'm going to explore some reasons why this is happening. Full disclosure, I hold Alibaba stock personally. It's a fairly heavy weighting in my portfolio. I definitely don't recommend that anybody else buy the stock. As always, do your own research, speak with a financial advisor, and all that other sort of thing. So with that out of the way, here are some reasons why Alibaba rallied 36% on Wednesday. The most obvious was the news that came right before the rally, which is China vowing to stimulate the economy. On the exact same day that the rally took place, China put out statements saying it was going to support its capital markets, add liquidity, do whatever it takes to support the market. And this is apparently, it's been rumored, gone so far as China potentially buying up stock ETFs to support their stock market, which would explain how uniform that rally in Chinese stocks was. Because if you've been on social media reading about some particular Chinese stock, like say Alibaba or Neo or any of the others, you might have noticed that it was up a lot. Well, pretty much all Chinese stocks were up dramatically yesterday. And one possible explanation for that is that it's the Chinese government buying up ETFs. I can't say for sure that that's going on, but I know that it's something that is rumored to be happening. So the bottom line is that China has vowed to support the capital markets. They may in fact be going so far as to literally financially support them by buying up ETFs. And all of these factors combined most certainly contributed to that rally yesterday. A second factor is there hasn't been any negative regulatory news in a while. In 2021, the regulatory news was what was holding Alibaba stock back. They took a $2.8 billion fine. They were forced to share their payments with Tencent. They had to scrap their choose one of two policy. They had to contribute $15.5 billion to China's Common Prosperity Fund. That latter point was a little bit exaggerated, it turned out, but it was a big concern at the time. $15 in Common Prosperity Fund contributions over 5 years, plus the $2 billion fine, plus taxes went up. I mean, there was a lot of things being thrown at Alibaba and other Chinese ADRs last year, and basically that was really leading to the stock going down a lot. It's down something like 70% from the highs, and I think in 2021 alone, it was down like 50%. So there was a lot of regulatory news holding Alibaba's stock price down in 2021. Fortunately, there hasn't been so much of that news this year. I know there are rumors that Tencent is going to be taking a huge fine, but Alibaba isn't. Tencent, a Chinese state-affiliated newspaper, I think it's called the People's Times, I'm not 100% sure on that, said that Alibaba would emerge from a dark woods in 2022, which kind of seems to be signaling that the regulatory pressure on Baba is mostly eased off. But we can never be 100% sure, but what we do know is that there hasn't been any negative regulatory news for Baba itself in a very long time, and that could be helping its stock price. A third factor is possible progress on the Russia/Ukraine war. And this gets into why Alibaba continued falling further after hitting those lows of, $105, $100. That was thought of as likely being a low for Alibaba stock, because that came after the earnings release, which was like mixed. The revenue missed by a little, but adjusted earnings beat. And with tech stocks these days, because people are concerned about the interest rate hikes and things like that, and generally speaking, if the earnings are not like really amazing, like a really big beat, they will go down. And sure enough, Alibaba went down a little bit after its earnings release, which was which makes sense because it was like a beat, but not really a big one. And then after that, it started going down even more. The reason why that most likely happened, why the price falling below the $100 level, was the Russia-Ukraine situation. First off, it correlated with that development. Second of all, there was a lot of concern about the U.S. applying sanctions to countries that were perceived as aiding Russia. There were stories being floated that China was going to support Russia militarily. China has been aligned with Russia in other ways, like, for example, economically. There was talk of potential sanctions on India for continuing to trade with Russia. And all of these things involving the Russia/Ukraine situation have got investors freaking out. However, more recently, there's been concern that the Russia/Ukraine situation will finally come to an end because the parties are at the negotiating table. They haven't negotiated a ceasefire, but they are, in principle, coming closer to some sort of agreement because we know that Ukraine is no longer saying that it is going to try to be part of NATO. They're willing to consider letting Russia take those eastern regions, which apparently were all Russia was going for in the first place. It's not immediately clear why Russia went all the way to Kiev. So it looks like potentially the war in Ukraine is going to end. It might not end overnight, but when it does, there'll be a lot of pressure off countries like China because this talk of them potentially getting sanctioned themselves just for being allied with Russia will ease. A fourth factor is possible buybacks. I use the word possible here because I'm just speculating. I haven't heard any news of an ongoing buyback, but Baba has been doing buybacks for, the better part of 2021 anyways. I think it's about $15 billion worth of them they're going to be doing by the time the buyback program is over. Generally speaking, there have been several inexplicable rallies in Baba stock where it would go up 10% in the midst of this big downtrend, and a lot of people thought that was due to buybacks. So if Baba is not buying back every single day, if they choose specific days on which to do their buybacks, then those buybacks could trigger huge increases in the stock price, particularly when it's at a very low level, like say $72. And if on that day they do $2 billion worth of buybacks, that's going to move the price a lot. And the fifth and final possibility, which I've alluded to already, is the possibility that China is buying stocks through ETFs. That's something that could be going on. It's been rumored that China is going to go so far in supporting its stock market as to actually buy up ETFs. That's a level of support for the equity markets that's not usually seen. When you hear about the Federal Reserve supporting the stock market, usually all that means is that they're lowering interest rates, but they're not actively buying up stocks. I mean, they're involved in buying and selling bonds, but actually buying up stocks just to drive the stock prices up is a little bit unheard of. But there have been rumors that China is considering actually buying stock ETFs to support its markets. Now, I can't say that's ever been confirmed, but the uniformity of this rally in Chinese stocks, where basically every Chinese name you can think of went up a lot on one day, does seem to lend some credence to the thesis that that's going on. So just to conclude, that was a great rally in Alibaba stock, but let's not get complacent here. The political situation is still very challenging. There's still a lot of tension between China and the US. You better believe if China ever invades Taiwan, that's going to cause some problems for Alibaba shareholders, particularly with the Russia situation already in the background. There is significant risk in this play, so tread carefully. That's it for me today. Later.